In today's video, I will be showing you a strategy which ICT himself said that you can quit your job in 90 days just from this strategy alone. Okay, so just to simplify things, I've actually gone ahead and created a step-by-step trading plan for this exact strategy. Also, one more thing I want to make very clear for you guys is that it's not just me saying this. ICT actually said this himself, right? So I'm sure if you look hard enough, it's somewhere out there on YouTube. He speaks about it. I'm pretty sure it's in the 2022 mentorship. If you go through that, he does tell you that you can quit your job in 90 days if you follow the step-by-step plan that I've outlined in today's video. Anyways, without further ado, let's get into the video. What time do we actually trade the strategy? Now, we don't just trade at any random time. We trade at specific times only. So the macro actually runs from 9:50 a.m. to 10:10 New York time. So this is usually the time that you're going to be entering the trade. Now, the actual time from when you enter until you exit is from 10 to 11 a.m. New York time. So you don't want to be holding or taking any new positions after this time frame window has passed. Preferably after 11, I tend not to take any trades. Next is liquidity. You want to hop into the 15-minute time frame and you want to mark out your buy side and sell side levels at 8:30 a.m. New York time. Now, people may ask me why 8:30 a.m. This is because there's usually a news embargo that comes out at this time. So this can be obvious swing highs and swing lows that liquidity is resting above or below. You can also use session liquidity. For example, Asia low or London highs. Now, these have more significance. And you want to wait for either buy side liquidity or sell side liquidity to be swept. So once buy side or sell side liquidity has been swept, you want to anticipate a displacement in the opposite direction. After getting the displacement, that will follow up with a market structure shift, which is a break below a recent or significant swing low or a break above a recent or significant swing high. So obviously, if you're bearish, you want to see a break below a swing low, and vice versa if you're bullish. After a market structure shift, a fair value gap will follow. So now you want to hop down into your lower time frames, such as the 1 minute time frame, 2 minute, 3 minute, and so on, and identify a fair value gap to take your entry off. I tend to use the 1 minute, the 2 minute, and the 3 minute time frames the most. I don't usually use the 4 minute and 5 minute, but if there is an opportunity on them time frames, I will use them. However, I stick to the 3 smaller time frames. Okay, so once you've identified your fair value gap, you want to set your limit orders on the edge of the fair value gap. So once price taps it in, it should trigger you into a position. Let's quickly go over stop placement. So you want to place your stop above a recent swing high if you're bearish, or below a swing low if you're bullish. So the minimum stop placement should be the first candle's high or the second candle's high. Obviously, this is vice versa if you're bullish. However, you do risk getting stopped out this way because the stop is very, very tight, guys. And yeah, it is recommended that your stop should be above a recent swing high or a swing low, okay? And lastly, you want to target opposing liquidity. So this is where your take profit will be at a sell side liquidity level or a buy side liquidity level. Okay, so now that we've gone over the trading plan, let's hop into the charts and go over some examples. Just a quick reminder, guys, before we get into the charts, the live signals room is still available for only $20 a month. However, at the end of this month, in March, prices will be going up to $30 a month, so be sure to secure your spot now. You get access to my exact entries and exits whenever I go into a live trade, so that includes my take profit levels, as you can see, my stop loss levels, full transparency, guys. But yeah, the value inside here is absolutely crazy. We only took 1 loss this week on 1 break-even trade, netting over 80 handles profit on NQ. Absolutely smashing it inside the signals room. The members in there are making consistent profits every single week. So be sure to get in there before prices go up. And also remember, my entirely free Telegram group is also in the description. So if you want to join that, make sure to get in there. But yeah, anyways, guys, let's get into the charts. First things first, what you want to do is you want to mark out your 8:30 open. So these are your buy side liquidity levels here, and your sell side liquidity levels down here. Okay, so now that you've marked these out, you want to wait for either one to be swept, and then you will hop down into a lower time frame to look for your fair value gap entry. Okay, so as you can see, sell side has been swept. let's hop into a lower time frame, such as the 5 minute. You want to wait and anticipate a displacement towards the upside. So as you can see, price comes down, sweeps sell stops again, and you get a bullish displacement. Okay, so this would be your bullish value gap that you'd enter off. You would place your limit orders from the edge of the fair value gap, minimum stop placement below this low, and you would target the highs up here. So you're easily getting a 2.3 risk to reward on this trade. Let's see how this plays out, guys. Okay, it would tap even longer, and there you go, your TP would have been hit. Now realistically, there is a fair value gap down here as well that you want to cover, so your stop placement should be below the recent swing low or the candles low here. But in this instance, you're already risking 31 handles in this trade, so I would just leave my stop here, right? Okay, so now that we've gone over that bullish example, let's go over a bearish one. Okay guys, so this is example number 2. This is a bearish example. So what you want to do is mark out your 8:30 open, and anything prior 8:30, you want to mark out your obvious swing highs, which would be this high here, and your obvious swing low, which would be this one here. You can also mark these highs here, however, this is the first obvious swing high prior to 8:30, so that's why I've chosen that one. So once buy side has been swept, you will hop down into a lower time frame. Okay, so as you can see here, we've swept buy side on the high time frame, and we're actually creating a nice 5-minute unicorn model. So if you haven't seen my video on the unicorn model already, I recommend you go watch that before continuing with this video, so you can understand how that works. However, now we're anticipating a displacement towards the downside, breaking below this low here. Okay, so let's see how this plays out. And this is where you want to be entering from, and you want to be targeting the lows here. Let's put your limit orders at the edge of the gap. Your stop in this instance would have to be above the wicks high, unfortunately. I know it's quite a wide stop, however, the minimum stop placement is above the swing high, and your take profit will be down here. So it's around the 1.6 RR, but yeah, let's see how this plays out. Okay, so there you go, you'd be tapped in short here, and boom, look at that TP hit. That only took 1, 2, 3 candles, right? 3 5-minute candles, and your TP's been hit. And look at the time that that candle goes up into the gap, right? So we come in at 9:45. Macro time is 9:50 to 10:10. Usually you want to enter around 9:40. I would encourage you to adopt this into your trading. So if you are already trading the unicorn model that I recently made a video about, you can adopt this silver bullet macro time into that. Anyways, if you guys enjoyed this video, please leave a like, leave a comment, let me know what you want to see next. And last but not least, if you guys are really serious about getting your trading to the next level, click that link in the description and join the signals room, and yeah, secure your spot. And I will see you in the next one.